Look at Roku. Shares soared on the back of better than expected earnings, up nearly 9%. For more, let's bring in Jamie Lumley from Third Bridge. Jamie, quite a top line beat here, 874 million versus 773 million expected. That's driven by platform. That beat active accounts 73.5 million versus 72.8 expected, but the stock has now almost doubled since the beginning of the year. Can you buy it here?
So there are a couple of really encouraging things to see in these numbers. As you highlighted, seeing that ongoing strong account growth is definitely impressive. And then also just seeing platform sales continue to be strong, considering the challenging ad environment that we're in right now. And then on top of that, seeing device sales continue to recover. This has been a major challenge for the company, seeing some really volatile results over the last couple of years due to supply chain issues, et cetera. But being able to deliver these results is definitely an encouraging sign.
Yeah, on the advertising front, the company noted that the, quote, macro environment continued to create uncertainty with the total U.S. advertising market flat year over year in Q2. Traditional TV declining more than 9%. Traditional TV ad scatter down more than 17% year on year as well. I mean, is that a piece of the market that's going to come back and recover at some point, or are these secular declines?
It's a good question. And looking at this, I think there are a few things to keep in mind. Part is the side of just looking at the ad environment, continuing to prepare for the recession, which may or may not come. But also there are other things lingering from COVID, such as autos, for example, which have totally changed how they're advertising these markets. What we hear from our experts is that we do seem to be starting to see some encouraging signs in a couple of different verticals. So over the next 12 months, there could be some positive signs in the ad market as a whole, and also for visual media.
So at today's prices, are investors underestimating Roku, say versus Netflix, or are they about the same? Can you do some sort of a pair here? What do you do?
So comparing the two businesses, there are definitely a couple of differences to highlight. One is, of course, just the already underlying profitability, which is one of Netflix's strongest attributes, particularly in the current environment with a number of linear businesses struggling, such as the Disneys or Warner Brothers Discoveries of the world. But for Roku, there's the fact that they are on the path to profitability. They have been delivering on their goal so far of getting to 2024 with some profitable numbers. But also at the same time, it's a completely different scale. And there is still the execution risk when it comes to that. And also looking at how they're necessarily going to fare in their new ventures, such as the smart home products, and then also the original content, where compared with some of the other large players out there, they have smaller pockets.
All right, Jamie Lumley of Third Bridge, thanks for joining us.